Now I want to move on to see how we can actually place an order in the system. These orders have two types. To enter the system, basically, there are two ways we can tell the system what to do. Right now, for us, buy now or sell now is very easy. Sometimes it's very traditional or just like this brute force method inside. We're supposed to sit behind the system and at that very moment and price tell the system what to do. Right here, buy, or right here, sell. This is what we call this situation. What does market order mean? It means an instant and direct order at that exact price in the market. In a market order, the trader places the order manually and instantly. That is, at the live market price, that exact price. The price that the trading terminal is showing us right now, not higher, not lower, at that very moment, we tell it to execute the order based on the available rates in the market. The broker executes your order for you at that instant, which is called entering the market. We call this a market order. This order is the customer's agreement with the broker to execute at the current market rate. And new trades like buy and sell are executed for us at that very moment. Right? But guys, what we actually want is this. We want to do analysis. Right? Sometimes my analysis tells me that, for example, right now is the time to buy or right now is the time to sell. Sometimes we say after analyzing, let me give you an example with the dollar. For instance, right now the dollar is 25,000 tomans, right? Sometimes you say the dollar at 25,000 is a buy for me, buy it right now. Well, that would be a market order. At that moment, we hit the buy button for a market order, but sometimes you say, look, the dollar is at 25,000. In my opinion, the dollar still has some room to go up. But right now it's a bit too high to buy. Wait for it to come down to 23, then buy, okay? In that case, we're not placing a market order anymore. Why? Because we can't sit at the computer 24 hours a day to see when the dollar hits 23 and then go buy it. In the case of a pending order, which means customizing your trades, we set an order on the system. We tell it, look, I'm not always here, but you are available 24/7. So, based on my analysis, if the dollar reaches 23,000, buy it for me. Now, with a stop loss and a loss limit that we set so we can manage our capital. Let's see how it works. Placing trades or pending orders can be executed in 4 different ways. What are these 4 different types? We have 2 models. Some of our pending orders, as they say, have a stop at the end, and 2 types of our pending orders have a limit. At the end, let's look at buy stop and buy limit. So we can set 2 types of buy pending orders, and for sell, we have sell stop and sell limit, meaning we can also set 2 types of sell orders. In the orders that we are customizing, we want to get familiar with each of these one by one, but to make it easier for you to understand, all right, I'm going to give you a little shortcut among these 4 options here. Look guys, let's try to call the limit something else entirely, not the strict mathematical definition and not just the standard English term. We are essentially just making a quick shortcut, kind of encoding it in a way so it is much easier for all of us to remember later on. So what exactly should we call the limit? Reversal. Please keep this concept of a reversal firmly in your mind, because we are also going to call this stop something else entirely. In addition to that, we are also going to call this process what? It is known as continuation. Let me bring this here. Now, should we go over a checklist? I'll teach you a cheat sheet so you won't have to worry at all. What were stops? What were buy stop and sell stop? What were sell limit and buy limit, so that we can use them correctly in the moment? So what do? We said that for those with limits, what do we call the limit orders? Reversal. Now, for those specific orders that actually have stops placed at the very end, how exactly do we refer to these 2 distinct types of pending orders? We call them continuation orders. Now, how should I relate these elements? Let us connect them. We have them in 4 distinct parts, right? Let's go to the chart and see, guys, or the chart that we have. Either this chart is supposed to make a reversal from here. For example, according to our analysis, It's either supposed to continue from wherever it is, like this drop has started and will continue. So either we're going to enter a trade at the reversal point or we're going to enter a trade at the continuation point. This reversal and this continuation mean the same as limit and stop. That is, the places where a reversal happens, just imagine, here too, in a downtrend. What we mean by reversal is that these are the spots where it's a limit in our orders. Now imagine here as well, we have a continuation sell. These are the places where we want to enter on continuations. The order that we use after that. What was it? At the ends it had a stop, right? Stop means continuation. We go back. Let's move on to power. Of course, we'll go through all of this much more thoroughly with real examples on the actual MetaTrader chart, using the real symbol and meta tools together. We'll see where it is, where to select it from, where we need to make these settings, and how we work with it. For now, let's just prepare ourselves a bit theoretically, so that when we get there and it says stop or buy limit and we want to remove it, we know what it was and what it was used for. Now we want to remove it. All right, let's move on to buy limit. We said, guys, what do we call the limits? Reversal, buy limit. That means, for me, from here, take a reversal at buy for a reversal. Remember the dollar example I gave? We want to go through all these limits today using the dollar example, since many people deal with dollars. The dollar example is a bit clearer and more important for them. Can we use the dollar for this example? It says, a buy limit order is an order to buy at a price lower than the current market price. This order is used when the trader expects the start of an upward trend below the current market price. What does that mean? It means that we want to talk about buy limit, right? A buy limit works like this. Imagine the chart is right here and it is steadily coming down. It is moving down, right? The chart is coming down, guys, okay? We want to tell the system, look, right here, let's just say the dollar is currently at 25, for example, after coming down from 26. We say to it, look, even though I'm not at my computer, I want to place an order here. At what price? At 23 tomans. Whenever you come down and reach 23, what should you do for me? Buy for me. That means instead of continuing to go down, buy here for me so it goes up. So place a buy order for me here. We're clear on what buy means, right? Buy. So buy means to purchase, sell means to sell. Buy is used for an upward trend and sell is used for a downward trend. Now let's explain the meaning of limit order here a bit more. We said limit means a reversal. Pay close attention here. So what are you doing? You're going down from the point I mentioned, doing the opposite of what you're doing now. You're going down, right? But I want you to do the opposite. Enter a buy trade for me. That means as the dollar drops from 25 to 23, it's coming down, but I tell it when it reaches here, buy for me to go upward. Okay, so at 23, it buys for me. So I know that here at 23, I became a dollar buyer. If it goes lower, of course I'm losing, but if it goes above 23, I'm making a profit. So why do we say this? Limit means reversal, meaning the chart is coming down and we say do the opposite when it reaches the price we've specified for you. Buy for us. Okay, let's move on to sell limit. What is a sell limit? Now we want to set a reversal sell order for it. A sell limit order is an order to sell at a price higher than the current market price. This order is triggered when we anticipate the start of a new trend. You have predicted the price higher than the current price. What does that mean? Let's look at our dollar example. What is the dollar doing? According to the chart, what's happening? It's going up, right? What was it just now? 25. We analyzed and predicted that this would happen. What exactly? For example, the dollar reaches 27, and from 27, it suddenly drops all the way down to 24. Down? Now, since we are predicting a higher price from a lower one, when it reaches that point, that's where it starts to fall, and that's when we should sell. We place an order, we set a limit order, but why? Because when we say sell limit, it means we're asking you to act in a certain way. It's the opposite of what you would do in the current situation. What does that mean? Let's use the dollar as an example. The dollar is going up. Now here we said, what's the price? It's 25,000 tomans. We want to tell it, look, when you reach 27,000 tomans. For example, we've analyzed it for ourselves. For us, 27 is a very strong resistance level, and we want you to enter us into a sell trade from here. What does that mean? It means you go up, you reach 27, you're moving up contrary to the trend you want. You enter me into a trade, and from here, you open a sell position for me, and I know this spot. If it goes above the price of 27, since I've sold at 27, the higher it goes, the more negative my position becomes. From here, the lower it goes, the more positive it gets for me. Meaning, the lower the dollar price drops, I have entered a sell position from here, and the system is generating more profit for me. Now let's come here. We see that regarding sell limit and buy limit, we were already familiar with buy and sell. Now with limits, we've understood that it means you're going against the trend, right? So what should I do? If I'm placing a buy limit, what does that mean? It means that as you're dropping, I want you to go lower, and at a lower bottom, I want you to make a purchase for me as you're coming up. I want you to do the opposite. When you come up higher, make a sale for me. This is where a limit is used. We just shared a little trick. What about pending orders that end with stop? Like buy stop and sell stop? We said stop means continuation. Let's see what this trick's definition is. A buy stop order is an order that places a purchase at a price higher than the current market price. This order is used when the trader predicts the start of an upward trend above the current market price. Let's bring up the topic of stop again with our own dollar example. For instance, the dollar has started from 23 and is moving up. We do not have any trades yet. We say if the dollar breaks through 23,500 in the upward direction it is moving, from 23 it has gone to 23,100, 200, 300, 400. We say if it breaks 23,500, it will easily go up to 25. Basically, we want to enter the trend that has just started in the direction of the movement. In slang, they say get on board. It's the same trend that has started. We want to enter with the trend. In limit orders, you wanted to enter against the trend that the market was moving in. That is, I say, you are going up, sell a little higher for me. On the contrary, if we are coming down, buy a little lower for me. In that course, it was the opposite. We were considering the pullbacks. Do we say this in stop orders? No. If we see that a trend has started and is continuing, we enter in the same direction as the trend. For example, if the dollar is going up and we also want to enter a buy position in the direction of the dollar's rise, and likewise, if the dollar is dropping, for example, we want to enter in the direction of that same drop. Let's take a look at it together. So now we want to talk about buy stop orders, right? We said what stop orders are. This was a continuation of our cheat sheet. Okay, now imagine there was a trend that had been dropping up to this point, and from here, what does it look like? It has started to rise. We say that the upward movement has started, and after it has gone up a bit, we say, so for example, if you're moving upward through this zone, maybe your targets are here. If you break through this zone, enter me into a buy trade in the same direction as this buy you're taking, meaning when it reaches here, let me get on board too. This path you're taking, it started from here, but we wanted to get on board from here. But at the moment we gave the order to the system, where was our chart? At the moment we wanted to place the buy stop order. Let's draw it here one more time. We'll say the chart is here right now at this point right here. It's a live market, right? The price is here. For example, we say when you get here, if you break through this, I want to get on board with this upward momentum too, right? So I need to place a buy stop order here. Why did we call this setup a continuation? Because we want to enter in the direction of an ongoing trend. So when the chart price comes and reaches here, from this point onward, we are also in this trade. So in the direction it started, we wanted to continue in that same direction. That's why we call a stop order a continuation order. If the price was dropping and we wanted to specify a point where it should buy for us from there, if it was in a downtrend and we wanted to buy, in that case we would use a reversal pattern, a reversal order called a limit order. But with stop orders, we are looking to continue the trend. So if an upward trend has started and we want to continue it, we place a buy stop order. What does sell stop mean, just like we explained buy stop? It's exactly the same logic when we look at a sell stop order. Now, how does this selling process actually work in practice? Let's imagine there was a strong upward movement previously, but now the chart has clearly started a new downward trend. So right here at this specific live point in the market, we are watching the price action closely, right? We would describe this as a drop that has officially started, and we say, okay, this is where we want to look for our trade. If you want to break through this area where we want to place the order and go down again, I want that too. I'm partnering with you in this sell. So I come and set a sell stop for this area, and what happens for the market? When it breaks through here, from that point on, I'm also a partner in this sell trade, and I'm profiting from its drop exactly in the direction the market started to fall. At a certain point, I also got on board with this trend and am riding it. I continue with it, and since it's a continuation order in the downward direction, that is a sell, I use a sell stop. All right, now let's go and look at the events we saw about buy stop, sell stop, buy limit, and sell limit. I've taken a few examples on the chart, so let's take a look at them together. Just as we've explained so far, guys, we said that stop means continuation. That is, when we see stops here, it means we want to enter the market in the direction of the ongoing trend that has already started. You see, an upward trend has started from here. Here is our prediction, our analysis, and if it reaches this point, we say, in the continuation of this upward trend, involve us from here onward and take us along to the upside. And it's the same with a sell stop. What happens there? A downward movement has started, as you can see here, faintly. I drew the chart because we're saying this has started, and if you came here, it confirmed it for you. In the continuation of this decline, we need to set a sell stop so that it brings us in as well. Okay, what were limits? Limits for me were a reversal, meaning if you're going up, I say from here, let's take a sell in the opposite direction, or if you're coming down for me, in the opposite direction, let's take a buy from here. Okay, here a downward trend has started and is coming down. We've analyzed this area, and if it reaches this bottom, for example, this bottom is a very strong support. The analysis is that from here, it won't go any lower and should go up. So we place a buy limit here, and as it goes up, it will enter us into the trade. The sell limit works the same way. Here, the price is going up, it's an upward trend, and we say if it reaches this point, it's like hitting the ceiling. So technically, from here it should drop, so opposite to this upward movement, we want to enter a downward trade. And opposite to this downward movement, we want to enter an upward trade. This is also a definition of buy limit and sell limit, and they're different types. Up to now, we've either placed our orders in the system or manually executed a market order. We either entered a buy or sell instantly, or we submitted our pending orders, buy stop, buy limit, or sell limit to the system. Now, it's very important to instruct the system that if I enter this buy or sell trade, I've also set a specific stop loss and take profit for myself that I want to give you automatically. So that when I'm not at the system, you automatically secure my loss or profit for me. We call our loss limit the stop loss and our profit target take profit. In the system, these are usually abbreviated as stop loss or SL and take profit or TP, which will be discussed in detail in the MetaTrader chart. When you set a stop loss for your trade, in fact, you are telling the broker to limit the loss on this trade to the amount you have specified. Similarly, the definition for take profit or profit target is the same as above. Basically, we tell our broker that when the trade reaches our desired profit level, to close that trade and secure the profit. Let's look at another example together. Now let's think from the beginning. We want to enter a trade manually. Here, there are charts. The price goes up and reaches price X, right? Now I tell it to place a manual buy market order for me from here. Right at this moment, from here, I need to change the pen color so we know that from this point on, we are in the trade. When we tell it here to buy for us at this point, in fact, we also need to set a stop loss for the trade. For example, we said here is our SL, our stop loss. The size of our entry position, along with the price that we determine for it, we consider a certain number of pips. We talked about pips. A pip is the amount of distance that we can measure on the chart. For example, it's 10 pips. So here, for example, we previously mentioned that our stop loss is set at exactly 10 pips. If we look from the X point, which is the specific price X that we have already specified here, for instance, let's ask ourselves, what is the current price? Also, imagine the global gold price is sitting right at 1950. So we decided to go 10 pips lower than that and said it becomes 1949. That is 10 pips lower, and you must remember, guys, that every single $1 movement in the global gold price is equivalent to exactly 10 pips on your trading chart. This means a $1 drop directly translates to that 10 pip difference we are discussing. We said 1949 is our stop loss, our entry is at 1950, and we also set a profit target for it. What do we call it? Take profit. For example, the year 1960 is what we would typically refer to as our major turning point. Well, since we say every $1 in the global gold price is 10 pips, when it goes up $10, that means our take profit is 100 pips. And our stop loss is set at a very tight margin of only 10 pips. So that is the highly favorable risk to reward ratio of this specific trade. Here it becomes perfectly clear that we are only risking 10 pips by setting our SL for a potential reward of 100 pips, which means we are aiming for a 10-to-1 return. Our take profit, or in other words, our profit target. So we're actually making a 1 to 10 trade. That means if in this trade, with proper capital management, we risk 1% of our capital on these 10 pips. When it reaches our take profit, this trade should give us a 10% profit. On the whole account, so we follow the chart. For example, the chart has reached this point. At this moment, it doesn't matter anymore. Whether we're at the system or not, it doesn't matter. Because we've already set these stop loss and take profit lines and their prices for our broker. When the global gold price reaches 1960, here, the trade will automatically close for us, and with 100 pips profit, it will exit us from this trade. It no longer matters whether the global gold price goes higher or comes down from here on. We got a 1 to 10 gain from this trade. It's really great in a market that's open 24 hours and we don't want to be monitoring it all the time. We can set it up for ourselves. At what prices should it set stop loss or take profit for us? Now, there's also a second method. If this chart had started dropping from right here and turned back here, aiming to reach the lower trend. For example, at 1940, we wouldn't have been in that loss anymore. We would only have been at a loss equal to our own 10 bit. This is the beauty of it. We can do this with a really great fund manager and protect our capital. That's why we set stop losses, set appropriate loss limits, and also set profit targets. You really need to be precise about this, guys, when you set them. Let me tell you something. One of the issues I've often seen in the market with many friends is that they don't know how to properly set or use stop losses or appropriate profit targets. Sometimes they open a trade and it even goes into profit. It's a really good profit too, and it's time to secure those gains. But either because of their own greed or thinking, we've made this much, let's make even more. The chart moves in the opposite direction, and not only do they lose all that profit, but they even end up taking a loss. If we want to look at it on the chart, it looks something like this. For example, we entered this trade while the chart was going up, and we opened a buy position from here. The chart kept moving in the direction of our trade, and we made a really good profit with this analysis. But instead of closing the trade, even though our stop loss was here, we don't close it, or maybe we don't know how to. Where is the best place to secure profits from the market? After that, the chart starts to reverse, it pulls back and keeps coming back. It even hits our stop loss. For example, if our stop loss here was $10, and at this point, let's say we were up $100 in profit, because we didn't close the trade, we end up losing the entire $100 here. Not only that, but it even causes us a $10 loss. So, when choosing take profit and stop loss levels, you always need to have proper risk management, which we'll discuss in detail in the risk management section, and you need to apply it. I've also brought another example from the euro to dollar pair using real prices, so we can see how to set stop loss and take profit levels. All right? As we said, for example, we want to make a buy trade in the EUR-USD pair. where the current market price is 1.3853. So if we want to look at it on the chart, for example, euro to dollar, right here, the market price has finally reached the level of 1.3853, and now we need to consider what we want to do at this stage. As we previously discussed in our strategy, we want to go ahead and execute a buy trade. So let's proceed to set a specific take profit target for this position right now. Looking at the current market movement, we saw the price hit exactly 1.3863. So let's go ahead and set our take profit target right here at this specific level of 1.3863 to secure our gains. What was our TP here? The difference between our entry from 38.53 to 38.63 is 10 pips, right? And the stop loss at 38.43. So we set a stop as well. We also set a 10 pip stop loss for it. In trading terms, we're taking a one-to-one trade, meaning whatever we're risking here, our profit, so to speak, is also this same distance. Now, if the price drops below the purchase price and reaches 138.43, the trade will close with a 10 pip loss. And if the price rises above the purchase price and reaches 138.63, it will close with a 10 pip profit. We can see right here that it's exactly like that. Now, if the chart from this point where we enter the trade, if it goes up by 10 pips, we'll exit here with a 10 pip profit. And if from this same point, it drops by 10 pips, we'll exit with a 10 pip loss. This was a calculation using real prices.